morning, it's Saturday the 1st of December, One Step FX, and I was going to do a weekly Outlook video, but then I thought to myself, an Outlook won't really help me learn from the mistakes of the week. What I should do is a review of the previous week, because I've never done that, look at where the best trades were, is there any correlation between things happening, certain times of day, what should I look for, so that when I do come into the next week, I can start to get my RAS locked in. If you're not sure what the RAS is, that's your reticular activating system, which will pick up on patterns, things occurring at the same. So if you've ever suddenly noticed a car you've not seen in a long time, all of a sudden you start to notice these cars all over the place because your RAS is locked in on that particular item or visual trigger and it's looking for it. So bizarrely enough, I've logged back out, logged back in. My demo account still hasn't been updated, and if this is the first time coming to my channel and looking at my videos, yes, that's correct, I am using a demo account. I'm a struggling trader, like many of you out there. I've lost lots of money over the last 3 years, and I've finally taken a step back and admitted that what I'm doing isn't working, so what I need to do is figure out what works, prove to myself that it works before I even consider putting any more money in my actual live account. So I don't have any social media apart from YouTube. I just found that had a negative impact because I was always comparing myself to other traders. I was always comparing myself to what others were doing, how they were trading, rather than focusing what is the most important thing, and that is how I'm trading, what I'm doing, and what works for me, because we're all different. What works for me might not work for you, but hopefully with these videos you'll get to see what I trade, how I trade, and you may learn something, you may not, or you might pick up a strategy that I'm using and think, oh, if it's working for Joe, it might work for me. So we will start part one of this video with the Euro USD. So I wanted to look back at the last 7 days and really look at what's happened. So as I mentioned, all through the week I did have a bearish outlook on the Euro USD. We still, as you can see, we still have been respecting this 21 EMA, so even going into next week, just looking at what's happening here, I'm expecting further downside. I did get caught out by Wednesday and Thursday there, but let's have a little look. So when you break it down, he says, you know, this is the week. Go to the 4 hour, make that a bit more apparent. You know, we got Sunday night there through to yesterday, and when you condense a whole week into a little box like that, it does make you realise that we've not really moved a lot. But as you can see, just to start with, on the 4 hour, prices come up to the top. We didn't break these highs here, so I guess what we're going to look for next week is really, will we break out below the bottom of this range? So just pop down to the 1 hour chart for you. Now I trade 2 different strategies. If you've watched for the 12 people that watched the last 5 videos, you'll know that I have a Fibonacci based strategy where I'm looking for a 618 retracement, and if that's met, then I will look to trade the Fibonacci extension of that move down to the 127. And when we're in a trending market, I've got a scalping strategy where I'm waiting for price to push away from the EMAs. I'll then drop down to the 5-minute chart to find an entry where price on the 5-minute is pulling back into the 8 EMA, and then I can set my orders 3 pips above the high, 3 pips below the low, 2 positions. First trade's a 1-to-1 risk reward, second trade's 2-to-1. but I'll go over that one when I plop those on the chart. So to start with, we're looking at the Fibonacci trade. So I just wanted to have a look back really and sort of try and figure out, is there a way I can take this trade better? What can I do to make sure that when I do take this trade, even though I'm 100% confident in the strategy for this one, is there anything else that I can add in to really make sure that when I'm looking at the charts, I can make this the best, give myself the best possible chance that it's going to pan out. So, how can we do this? Let's just scrunch that up just a teeny weeny little bit. So, I have found 3 positions. So, over the whole week, in the whole week, there would have been 3 perfect trades, effectively. Really good trades that wouldn't have done anything other than make you profit. So I think the best way, because I was looking at the 15, I found the best entries generally are looking at the 15-minute chart. So let's have a little look. Get rid of these advertisements. So on the Euro USD, so first thing I did, see I'm waffling, going around in circles. First thing I did was sort of to look back and figure out, also we've got this overall daily box, daily range. Is there any other zones that I should be made aware of? Because for me, if I can see we're in a range, I won't be looking for the scalping trades because I tend to get my fingers burnt because price is moving sideways. So realistically, there were sort of 3 ranges that we had last week. We had this range here, price eventually broke below. We've come to the bottom, and obviously it coincides with the bottom of the bigger range. And then we had the most recent range at the top of the overall picture. So those were the things just to consider, just to, in my mind, just put myself, right, price is moving sideways, we're not moving up, we're not moving down. So once I've established that, I can then start to organise my thoughts in my head. But granted, this overall daily box we wouldn't have seen at the time. So, what can we look for? So the first setup, going back down now to the 15-minute chart. Okay. So, we've got something like this. So, as I said, I'm waiting for this sort of move. So from this swing high to this swing low, we've come back up and we've hit the 618. We have got a 3-bar reversal there. The trend fib extension, so moving downwards, so measuring from this swing high down to this swing low, back up again. As you can see, we did have this 1, 2, 3 sort of move. Now on this trade, I wouldn't have aimed for the 618, but it shows that in the right place, the 618 golden ratio would have been hit. I would aim for the 127 just because I know that's got the best chance of being hit, and the 1618, after what I've looked at, may be something to test next week just to see if it does work. I don't want the data window. What is going on? So we've got that position there, and again, with all the trade that I'm looking at taking, I am looking for a risk reward, he says, if I can find the right risk reward. Oh, goodness, the joy, there we go. Of 2 to 1. So, entering here, this trade itself, it was a range of 36 pips. Okay, so we would have had 36 pips as the range from high to low. So we're looking at 18 pip stop for 36 profit. And that's just one position. And that's, you know, you got half percent risk for 1% gain. So not bad. Let's have a little look. Where would the potential next area be? So prices come down, we started to range, we did break then this overall range, and when we've come back up to test the the range again, we have from this swing high to this swing low, we've hit the 618. Again, back up into structure, as you can see here. Back up, so a bit of confluence there as well. And again, the fib extension, pretty much bang on the money, down to the 1618. Again, the 127 would have been hit. The reason I tend not to aim for the 1618 is because of these moves here, like this, where you can see, oh well, it did hit the 1618, but because of the spread, this is what you've got to remember, the spread, sometimes price will get down unless you're manually closing it yourself, but because I let the trades get taken out automatically, the spread is what you've got to consider. So there's something that I could do along the lines of, well, if I know prices come down to 12,812, I'll set my stop 3 pips before that, so I'll go for 12,832. You know, so we've got 3 pips above that, just so that the spread takes me out before we have price come down and reverse. I mean, I don't know how many of you have ever had your trades literally get to your profit target only for price just to reverse, and you know, it reverses on the, you know, on the, I don't know what's the phrase I'm looking for, turn of a penny or whatever it is, you know, it literally touches it and then it reverses and it starts going in the opposite direction. You know, so again, there's the second trade that we could have had using this strategy, just waiting. You know, you would have had the profit on that one if you were involved in that trade. We had 48 pips on that one, so 24 at risk. Again, the stops aren't that big, 18 pips here, 24 pips here, but using the right, you know, percentage ratio, you'd scale up your position size to match that so that of your account you're not risking more than 0.5%. And then, you know, price was coming down. At this point, I was still considering what price is going down, and I got caught out by this move. Even though this happened, I still had, as you can see in the videos, if you go back, a bearish outlook. I was trying to catch the down move, and I did get burnt because I was trying to catch a move. What I should have done is wait, and I did wait, and in yesterday's video you'll see how I determined to catch this move down. But what was the ideal place to take the trade? Or where's my setup? Where's the best setup? And that would have been from this swing high here to this swing high, swing low, 618. And I did notice that sometimes when you've got the right movement, when price is coming up into 21 EMA, that's where, if you get the right rejection, you can have it. But again, prices come back up. Again, this one you would have had no problems without putting your 3 pip stop, you know, before you would have hit the 618. And the risk reward on this one, what do we have? So it's 38 was the total risk reward. Let's just unlabel that. So you've got your 1, 2, 3 move there. What am I still hiding? There we go. So again, we've got, again, a 38 pip sort of move. So if you'd got in at the precise moment, not saying you will, but for the risk of 19 pips to gain 38 with the right risk reward, 0.5% risk for 1% gain, that's not really, even if I took those 3 trades, so if all week all I waited for on this pair, whereas these 3 trades, just get to the 1 hour so you can see it a bit better, as a 3% week. If I'm aiming for a sort of 3% gains consistently a month, you know, 3 trades, yeah, there's a lot of movement, but here's the biggest thing that I found. Here is the biggest thing that I found. All of these trades set up around lunchtime GMT, so I'm in England, so around 11:30. Let's have a look here. So back down to the old 50. Pardon me. And this is the other thing that I've you hear certain people talk about they only trade the markets at certain times of day because that's what they do if it's the US Open, the London Open, blah blah blah. I never really sort of took much time to pay attention to that sort of thing, but this has really piqued my interest simply because the first trade would have been at 1:30 on the 26th. Okay, so 1:30, you would have seen price pop up and done. Second trade, around 1 o'clock, price come back up, you would have been looking there. And the last trade of the week, surprise, 12 o'clock, sort of 11, well this one's a little bit lower, between 11, so I would say between 11 and 1, and 1:30 even. Potentially that's where the best trades could be for this setup. So certainly this week, you know what I'm going to be doing at between 11 o'clock and 1:30 on the Euro USD. I'm going to be seeing if we've got any 618 retracements, and this is the whole point of using a demo account and really taking the time to test your strategy, tweak it, figure out what will give you your edge so that you can have the most stress-free trading experience you can. It also means that if I know on an average week I can get 2 or even 3, if I even have had 2 trades, 2% a week, 2 trades, not a lot, but what would you rather? Be trading all day, which I tend to do at the moment, which is very bad, but looking for trades all the time. One day you'll be up 2%, the next day you're down 4%, next day you're up 1%, next day you're down 1%, and then you end up either having break-even weeks, or even, as is my case, you get frustrated because you've taken too many trades, you've taken too many trades, which has then resulted in a loss, and then you're taking trades that you shouldn't be taking because they're not in your plan, to try and claw back the profit in a very bad way. That's my dog Max. Sounds like a bloody... Yeah, that's Max. Yes, we have a werewolf downstairs. So yeah, that's the fib. So just by taking the time this morning to really review what were the trades that I should have taken, it sort of really makes you take a step back and think, right, okay, so if there's 5 days, I need 3 trades, and that's just on this. You know what I mean? I'm looking for... My goal for next week is to take 1 good trade a day. Now, it might not necessarily be just these trades. I've got my other strategy, which we'll go over in a moment, where we're scalping. So if we're in a ranging market, I might be able to take that, but at some point in the last 3 months of trying to figure out what I've been doing, I don't think I have had one day really where I've just gone, you know what, there's no trade setting up. There's just not a trade. It's not a trade. I think what would help me is to have days where I'm not looking for trade. Well, if there's no trade sets, I don't take a trade. Certainly after this week and the destruction that I've caused by myself, I think I will be more likely to find a day where maybe there is nothing I take. But, recap. I'm going to be looking between 1 o'clock and 1:30 for these trades because that seems to be the time where we're coming to the end of, I guess, the London session, getting ready to sort of, get in before the US Open. So what could be happening is, momentum of the London session, start to have a pullback, and then what's driving the price where it's going is the US Open. Just a theory. And some of you might be screaming going, obviously, that's what we do. We'll see how it goes. So that is the USD, Euro and my fib extension trades. So what we'll look at now, I'll get the charts ready and we'll look at where the best opportunities were for some scalping positions, how many there were, where the quality trades were, and we'll see if there's anything that's lining up that's given a better chance, or if it's more of an ad hoc type setup there. Okay, time to take a look now at the opportunities that would have been the winners for the scalping strategy last week. This strategy, actually, I'll tell you what I will do as well, because it's not even my strategy. It's a strategy by Forex Signals TV, which I saw it and thought, oh, that looks good. So I'll tell you what, where are they? I'll show you the video, so you can go and watch it yourself. Where is it? There you go, this one here. Simple scalping Forex strategy. And it really is simple, straightforward, and great, in my opinion. So if you want to see where the rules are, you can look at it there. So following those rules, the true rules are we need to price on the 1 hour is what they call the anchor chart. So what you're waiting for is price to be pushing away from the EMA, and then we drop down to the 5-minute chart to see if there is an entry. So this one is more based on momentum in the market and where we think price will be. So looking at the chart, because this is the other thing, with this strategy, it is easy to find setups, but that are in the wrong places. So for example, you could find setup when the EMAs are crossing there, you could find a setup in there. You know, it's very difficult, and there's probably some tweaks that you can make to make it your own, so that you know, because I've seen results from this strategy not necessarily sticking to the rules that they set out, which is the price moving away, because it's a trend continuation strategy. But basing it off of those rules, which is designed to have the best chance, of course, of price hitting targets without much pain, should we say. We had sort of these areas here really where the setups happened. Okay, so these are the 3 highlighted areas. I was looking here, but price just didn't retrace. These moves here, there was too much of a pullback and the EMAs were scrunched up, as you'll see. So I think for this one, we'll just pop in the various risk rewards and trend lines that I've set out, and we'll look down on the 5-minute chart. So the first trade, all the way, and again you can see there's a lot of, I did take one trade during the week here, which did, I think, hit target 1 and 2, because it's quite a shallow pullback, so it wasn't much of a spread, but again, didn't really hit the rules. But I'll need to do some testing on that just to see if I can figure out what's going on to make it more adaptable, should we say. So what we're looking at is price pulling away, and this is the setup here. Okay, so price right here was pushing away from the EMAs, pull back up into the 8 EMA, and that's what you call the trigger candle. So the entry is 3 pips below this wick here, stop is 3 pips above, and then you've got 2 positions that you put on. The first one is for a 1-to-1 risk reward, and that is highlighted with the black little line, and then the second one is a 2-to-1. So effectively you can make a, I think it'd probably be like 1.125% per trade if you're looking at overall risk at 0.5%, which isn't bad. And again, you can see why this you have to wait for the setup for it, because it just means that you're less likely to get stopped out. So what's happened, price pulled up, you put your orders in. Now if price were to do something like this and break the 21 EMAs, we have a candle push up, and again you cancel it, cancel the orders, wait for another setup. What I've noticed is even if you have one candle close here, you need a second candle to really close higher, because sometimes price does push a bit higher and then closes back down below. So orders were set, orders were filled, Price chopped about a bit, and then price eventually did push down and hit target 1. So on this trade, target 1 was for 15 pips. At that point, stops moved to break even, so you're a risk-free position. You can let it ride then, no worries. It did take a little while, moved sideways before it did eventually go out and hit. And this is the other thing. I started finding myself, we had trigger candle there, trigger candle there, trigger candle there. It depends how aggressive you want to be. And sometimes it's worked out fantastically where you catch the right move, you can start to pile in and really make the most out of that one move. I think in my mind I'd rather find the one good trade and increase the position size rather than have lots of different trades all going at the same time, trying to manage them, trying to move stops to break even at a certain point. Just becomes a bit complicated. So there was only one trade there, and then the rest of the week I think I was involved in trades that may have hit target 1. I'm just looking at trades here that have hit both targets, but certainly I've had plenty of times where I've entered the trade, price come down, and then I'm stopped out on the second position. So I've made you know, 0.25%, because a 1-to-1 is 0.25% on the first position. But again, price again there would have been a setup. You probably would have been, well, you would have been filled. Price would have range. You might have hit target 1 and then been stopped out on this spike, which I think probably did happen to me. And again, sort of down here, I was looking, oh, trigger, yeah, probably got filled and then stops. I know on this one, I took a trade here and orders got filled, price pushed down, and as soon as it got to the bottom, double bottom, this momentum kicked in, okay? So, looking for the best setups, again, I did take a trade here, price pushed up, I think I hit target. Let's have a look at that one. I think price hit targets 1 for sure, it might have hit target 2, so if we're looking at that, entries would have been 3 pips below that, so that's 69. And then target 1s, so stops, so we're not over halfway, so that'll be 15 pips there, so 30 pips. Yeah, I think you would have hit target 1, price would have come up, took you out for target 2 at a break even. So you can make little trades here and there, but realistically, you want the satisfaction of hitting both targets. So again, there's a setup here. You know, what we've got to remember is with these EMAs, they're a lagging indicator. So when you're looking at these trades, there's a setup that I set orders on, but I had to cancel because the price eventually did push lower. This one, setup there, price pushed up, but second candle. So at this point, we wouldn't have seen these reversal candles. All I've seen is price pushed up and it's gone down. So it might be something along the lines of, because at this stage, it's just an order. This trade is pending off the back of this move. So because we've had the move down, up, an order set waiting for price to move down and hit this position to fill it. One thing I might look at is how many pips. So for example, on that setup there, price moved after that close. So from the trigger candle, that only moves 6 pips. So if I say, if price, you know, for my rules to make it my own, if I say if price moves more than 10 pips above, which is in some circumstances it won't work because the EMAs will fan out quite a bit. But again, looking at these, once price has broken the 21 EMA, I think it'd be more a case of once price has broken the EMA, if price moves more than 10 pips, cancel the order, because even if you leave, nothing's going to affect you because it's an order, you can just cancel it. But if price then comes down, fills, you would have been alright on that trade. So that's something I'll probably look at testing as well. So this setup, this is the one that almost stopped me out. Almost stopped me out. So order got filled, happy days, and then price came back up, came back up, and I know on this one I had a 14 pip stop, and it came very close, but eventually hit target 1, moved to break even, pushed down. You had then this setup here, which I didn't take because I had my trade, made my profit, banked it, happy days. So this one you would have hit target 1s for 19 pips, and you'd be running at break even on the second trade. Given that that's a Friday, I probably, if I was in that trade, I would have closed it, just because I've got into the habit now of not wanting to have trades open over the weekend. I've seen the plus side of having that with the big gaps, but I've also seen the devastating effects that leaving trades open, and if you're not really that far in, especially with these type of trades, if you're 100 pips up, you might be alright, but I've been stopped out quite significantly, more than I care to remember, because I held a trade over the weekend. It's just not worth the risk for me. So those are the 3 positions that, again, 0.5% risk for 1.25 reward, half a risk, 0.5% risk for 1.25 reward. So we've got, I think you would have made 3% just off those 2. 3%. No, 2.5%. Get me maths right, Joe. 2.5% just on those 2. And this is the thing. This is what's starting to sink into my head. If I'm just taking. So let's just discount that trade there. Let's get rid of that trade. Get rid of this box. And the line. So, we've got 2 trades there. So for the whole week, using this approach on this pair, I would have had 2 setups. Both would have won. And I would have made 2.5%. Great. So even if I did that for the week, 2 trades, 2.5% for the week, that's really good. If I then took these positions along with the Fibonacci trades that I took, what were we saying there? We had 3 setups, that's 3%, 5.5% if I took all those trades and nothing else. So let's have a look at something else. So when did this setup actually set up? So on this trade, we're looking at 2:30 on the same day. So we had the Fibonacci trade set up here at 1:30, and then we've got the setup for this around 2:30. That's interesting. Fibonacci trade sets up at around 11, and this trade set up a little bit before, admittedly, but we had the break of this. This is the breakout, so we had the breakout of this zone, which went over yesterday, but as soon as we broke this trend line here, we were looking for downside. But, that just demonstrates, one, to you, and more importantly to me, that to be profitable, realistically, if I wait, and you can see both of these are positioned right at the top of the move. So you've sort of broke out from this range down, broke out from that range down. It makes you think, doesn't it? And certainly makes you, it certainly makes me, I should say, want to sit and wait, sit on my hands and really wait for these setups. Because now looking back at the week we've just had and seeing where the best trades would have been, it makes you understand that I shouldn't be looking for trades all the time and taking bad trades, and I wouldn't be down minus 20% if I'd done this sooner. Live and learn. We learn from the errors of our way. So that's the Euro USD, and I think even more importantly, just before we look at Japanese yen, US dollar, or USD yen, one good trade a day makes you more profitable than 95% of the market, but also if you don't take a trade, that's still going to make you more profitable because you're not getting involved and you're not losing. So risk reward, risk reward. Okay, I'm going to get me another cup of tea and then we can take a look at the USD yen and we'll see again what setups were there on the Fibonacci side and also what's there on the scalping side. USD yen. So again, firstly, just on the daily, just before I look at what happened last week, we can still see that the EMAs are fanning out, and there is potential for more upside. So I think certainly next week that's something that I'm going to be taking into consideration. But let's have a look quick down to the 1 hour chart. So with the USD yen, it's been a bit more of a trending market last week. You know, we've literally gone up, down, up, and remember, we wouldn't know the area of this zone until we'd created these points at the end of the week. So hindsight's a wonderful thing. But let's have a little look at what has been going on, and certainly by the way things look here, plenty of things that had occurred. So first of all, again, just looking at sort of potential zones that were moving sideways. Again, there were sort of 3 zones that we had, you know, before we broke out. Range broke out and then obviously broke back down. So let's have a little look. So the first track, again, I'll jump down to the 15-minute chart because this tends to be the best place to catch these type of moves. So the first one we had, so price had come up, bounced off the bottom, and then we pulled back here. So this was the first 618. You can see plenty of taps there, lovely. And you know, we did go on and hit the 618. Second setup, again very close thereafter. I'll just expand this a bit because it's a bit condensed. The second setup that would have been presented after this, again, what I found just plotting these on, they happen quite quickly, quite close together. Again, so from this swing low to this swing high, price did pull back into the 618, and we did push up to the 1618. So again, just had this 1, 2, 3 move there. Next setup, when price pushed up, pulled back down, pushed up again from this low here on the EMA, 618, and then price eventually did push up to those highs there and hit that. There may have been another trade. I mean, just looking there, you could have had one there potentially. I mean, this is the thing that I've noticed with the USD yen. It's because of how it moves, and again, the moves aren't that big, but you've got potential setups. Not quite, but you know, you can. This one works quite well on the USD yen. But let's continue with the unmasking of where the next one was. That's the label there. So, just to give you an idea though, these first 3 moves, the first one was for 16 pips. The overall move was 16 pips. So you would have an 8 pip stop. Again, if you're looking at 0.5% risk for 1% risk on this pair, that's not that bad for 16 pips. It's not volatile, moves quite consistently. Again, second move, 25 pips, so you're looking at what, 12.5 pips, or 13 pips, 12 pips, depending on which way you want to go. For the second trade, all of these pretty much pain-free trades. That's what I'm looking for, is the pain-free trades. Where do they happen? The next one, again, 23 pips. Obviously, price did come back down to entry, but if you went for the 127, you would have hit target, and it would have been okay. Again, I would typically go for the 127. It does bring the risk reward down, so you're probably doing 1-to-1 risk rewards on these. But if I've got confidence that I know if I do 1-to-1, I've got a better chance of hitting 1-to-1, well, you know, I'll go for 1-to-1. So those are those trades that are set up there. On the downside, on the retracement, we had this peak here, so 168 there, down to the 618, which again would have hit again. The 127, if you're going for a nice move there, would have been hit easily. And that was a bigger move, which was 39 pips for the 1618. And what's the difference there? So probably like 30 pips. So that's 5, oh no, 9. Yeah, like 30 pips for the 127, which again isn't a bad move. And then we come into the last, let's just get all these on there, the last sort of moves that we had. I took this trade. This was one trade that I did take. But here, I did go for the 1618, so I did get 22 pips, but again, hit that and then started falling back. But that just shows you there. There's a bit more going on with the USD yen, but smaller moves and not very quick moves. So this first trade set up, well, you know, that's 2 o'clock in the morning. Wouldn't have really been able to get in there. Again, good setup at 1 o'clock. I mean, the setup there would be at 5, that's when I wake up in the morning. I wouldn't really want to take a trade then, so you know what? If I can't take it, I don't want to see it. I'll take that off. So that first 14 pip move, yeah, it would have happened, I would have missed it, but never mind. So the next trade that I would have been able to take, again, 1 o'clock. And then we come up to like 9 o'clock at night. I would probably be in bed, I've got to be honest. So I may not have caught that, so I'll remove that because I go to bed quite early because I get up quite early, so I'll remove that. So you've got one move, 25. The next day, again, 10 o'clock. This overall bigger move, I wouldn't have caught that. There might have been a smaller move within the move. Let's have a quick look, see if there's anything in there that I may have been able to get involved with. So the first thing that's jumped out at me, just get rid of these ones. So I would not have taken that trade because I would have been in bed. I wouldn't have been watching the charts, I'd be in bed. So I can't count that because I want to find the trades that I can take while I'm awake. Otherwise it's pointless because then I'm going to start getting up earlier, staying up later just to try and catch these potential moves. So what do we have here? Potentially here. There's not really a 618 trade there unless you're measuring from a lower point, which again, I guess if you're on the 5-minute chart looking for entries again, what about there, popped up, and this is where it comes down to where you measure from, what you do. So you could say there'd be, well, again, it'd be a very, very short trade, but I think the USD yen's better for scalping. But again, I digress. Let's go back. So we've got the one trade there, and then the one trade there, because that's set up at like 2 o'clock. So again, for the whole week, 2 trades, realistically, that I could take, and for about 20 pips. Again, that's not too bad because we saw when it first opens up, chaos, so many trades. Realistically, would I have been able to take them? No, so we can't count them. So for the whole week, there would have been 2 good, solid Fibonacci trades. And again, if we're working on a 2-to-1 risk reward, if you're looking at the 618, which again, looking at the 618 and, you know, interesting. But you would have had, even if they did a 1-to-1 risk, so 0.5% for 0.5%, I'd take that. 0.5% for 0.5%, so you would have made 1% just on those trades there, so that's fine. Again, smaller, predictable, more probable trades are better than these ridiculously big, outlandish, high risk swings, short stops, etc. I mean, again, you've got to remember, even if, so let's look at this, so 1-to-1 risk, if I can unlock you, 1-to-1 risk for 127, 18 pips. Again, I'd be happy with the risk on that. If I'd gone for a 1-to-1 risk on this trade, 16 pips. Again, I would have been happy with that. That's fine. So again, it's just reinforcing the credibility of this trade. Yeah, as you can see, it doesn't happen all the time, or very often. That's twice in a week. But that's better. More is less, as they say. What we'll do now is look at the potential opportunities for any scalping trades that presented themselves last week. Again, looking at how the market's going, because we've been more, you can see straight away that EMA's have been fanned out here, fanned out there. You'd have more success with taking one decent scalping trade, I think, on USD yen. But we'll take a look and we'll see what presents itself. So we'll just get this all set up and we'll be back in a sec. Right, USD yen scalping positions, and well, as you can see, there's only one that I've got plotted on, and this really is the only one that would have hit target in a time frame that I could have taken it and would have hit both positions. So even though price has been going up, as you can see, it's been very sort of consolidated, and then there's only been a couple of times really where the EMAs have properly moved apart. There would have been a lot of trades on here, but lots of orders, and we'll go over that in a second. A lot of orders that would have been cancelled, a lot of target ones hit, coming back to be stopped out. So this was realistically down here about 1:30, again around dinner time, where we had that 618 and then boom, it's gone. So the trigger candle would have been this one here, pushed down, price didn't close below, but it hit both targets. You know, again, I think looking back, there's a setup there, invalidated, setup there, invalidated, setup there, invalidated. On the opposite side, you know, the EMAs would have been too close together to really, I want to see price fanning out a bit more, a bit like this. But again, price, you would have maybe hit target ones there. Let's have a quick little look. So if you're looking at this setup here, price is crunch up, starting to fan out. Let's have a little look. So target one. So if we're doing a 1-to-1 risk, and again, sometimes 1-to-1 might be better than 2-to-1. But the beauty of this strategy is, once you hit target ones, you move the second trade to break even. So you might find that you have a week where you hit more target ones than you do target twos, but you're still making, you know, it's 0.5%, or you could change your approach so that you're just aiming for target ones, do 0.5% for 0.5%, whatever floats your boat. So call that 50, so 47 would be the entry. Okay, and then 3 pips above this high, we are looking at 10. So 10 pips for 10 pips, say, argument's sake, that would have been target ones. So even that, you would have been filled and then stopped out eventually. On the upside, again, a lot of, that's the only one I would have really, I don't see price moving away. Bit too scrunched up. Obviously we've got this high here that we hadn't broken above, and realistically, when you're seeing price move, you don't want to be looking left, you want to think recently to the left. So we couldn't see there. Again, we've got this move here. At the time, I probably would have got involved in that trade, but looking at what happened, price would eventually have validated the trade. I would have closed off. Again, invalidated there. You can see the price really had just moved sideways until we got to around here. Potential setup there. Potential. I think the best setup would have been this one, to be fair. What would have happened there? So we've got 3 pips entry above. That's 90. And I'm just, if we're over halfway, I'm just rounding up to the next one. So the trigger candle's at this candle here. So stop level would have been 10 pips. So this one, would you have hit 10 pips? You would have. So that would have been a 1-to-1 trade. You would have hit target one, stops would have been moved to break even, and then price would have taken you out. So, you know, there's that potential there. And then we've got, you know, everything's just getting taken out. So again, because it's a very sideways week, again, there's a good setup up there. But again, 1 o'clock in the morning, 1 o'clock in the morning. Good setups, but not when I could have taken them. So realistically, I think the common theme seems to be, it certainly seems to be that trades are setting up at around lunchtime. Interesting. So, this week, if you ever watched the Fast Show, this week I'll mostly be looking for setups between the hours of, I guess, 11 and 2 would seem to be the optimum time to find good setups for the two pairs that I have. And also that means that if I'm only looking between 11 and 2, it means that I'm probably not going to take bad trades. Well, there might be bad trades, but I've got less likelihood of taking lots of trades. So I'll do that this week. What's the worst that can happen? I don't take any trades? Well, guess what? That's a good thing because I won't lose any bloody money. I'm not losing any bloody money anyway, but I'm taking this so seriously because I've failed for so long that I need this to work. And I'm determined to make it work. So that's all I've got for you on this Saturday. I think the video will probably be close to an hour now. But again, if you liked it, please share it, subscribe. Maybe I'll get more than 15 views, who knows. But this is mainly for my benefit, just so I can, in my head, talk out loud, go back over what worked, what didn't work in the last week, and looking to make those one steps. You know, the whole purpose of One Step FX is I'm just taking one step at a time to get better, and build and build and build. So enjoy your weekend, hope you enjoyed the video, and we'll catch up next week and we'll see if I can break some bad habits and stick to my plan.